Good morning, Trinidad and Tobago. I am Sarud Ramkilawan, and this is the Bourse Report. This week, we reviewed the 9-month results of Sagicor Financial Corporation for the period ended September 2015. As at close of trade on Friday, Sagicor was trading at $6.05, up 1.7% year to date. And turning to our first chart, investors would note that Sagicor has had quite an eventful year in terms of trading, falling to as low as $5.02 in early 2015 before rebounding to the $6 level recently. Sagicor would have delivered diluted earnings per share of 38 cents TT for the 9 months ended 2015, up some 56 cents when compared to the negative 18 cents registered in the comparable prior period in 2014. This positive performance was driven mainly by an increase of 7.5% in total revenue from $4.8 billion to $5.1 billion. Net premium revenues increased some $196 million to TT 3.1 billion for the period, an upward movement in earnings of about 6.7% from 2.9 billion in the 9-month period of 2014. Sagicor's benefits and expenses increased some 4.6% to TT $4.7 billion from 4.5 billion recorded in the 9 months 2014. This increase in expenses included integration expenses related to the RBC Royal Bank acquisition, as well as higher asset taxes for the period. Also wrapped up in these expenses were increased finance costs related to the issuance of a US $320 million bond issue, the proceeds of which were used to pay down its maturing debt coming in May of 2016, which was retired early, as well as to refinance some preference shares which also come due in 2016 of May. Overall, profit before taxes climbed to $494 million from $337 million as compared to the 9-month period of 2014, while after-tax net income from continuing operations recorded a $122 million increase from $263 million to $385 million TT. A noteworthy contributor to positive performance for the period was a $72 million reduction in net losses from discontinued operations. Whereas in 2014, for the 9-month period, Sagicor would have recorded a $190 million net loss from discontinued operations. For the comparable period of this year, it recorded a smaller figure of $118 million TT loss. This discontinued operation represents expenses related to the company's UK business, which was sold off in December of 2013, a fact which should become increasingly important to shareholders and the prospects of the stock's future performance. Turning to our second chart and looking ahead, at a price of $6.05, Sagicor is currently trading at a multiple of just about 11.9 times price to earnings, currently below the market average of about 13.5 times and the sector average also of about 14 times. Sagicor offers investors a trailing dividend yield of about 4.2%, making it an attractive stock relative to the market's yield of 3.4% and one of the few stocks on the exchange paying a dividend yield of over 4%. In terms of forward-looking anticipations, the sale of Sagicor's UK operations and its related contingent exposures seem to be approaching an end. The maximum residual contingent exposure is estimated to be about US $5 million, or about 32 million TT dollars. Translated into a per-share basis, this equates to about US 1.65 cents or TT 10 cents per share. In the absence of these significant losses from discontinued operations and any other surprises, Sagicor seems better positioned to deliver better results. This view, however, is balanced against Sagicor's exposure to the Jamaican and Barbados economies, which collectively account for about 80% of the group's revenues. Continued group revenue growth may be tempered by mixed outlooks for these economies, with a commensurate impact on earnings. Sagicor has shown considerable improvement in its continued operations, and the outlook for a reduced impact on discontinued operations or discontinued items is promising for stockholders. Taking this into account, investors may begin to adopt a more positive outlook on the stock going forward, especially if earnings continue its recent trajectory. Sagicor and its forward-looking performance seems set to improve as its European foray tapers away. While some investors may wish to take positions in anticipation of a stronger fourth quarter for the group, Bourse maintains a neutral rating on Sagicor in light of the outstanding, yet reduced, contingent exposure to the UK operations and the somewhat muted economic expectations of its major operating jurisdictions. On a related sector note, the Guardian Group is set to make an announcement later today regarding certain changes in shareholding and the acquisition by National Commercial Bank of Jamaica of a substantial interest in the company. We at Bourse will continue to keep investors posted as more information becomes available. That's it for this edition. For more information, give us a call at 628-9100, visit our website at www.bourseinvestment.com, or email us at invest@boursefinancial.com. Have yourselves a wonderful investing week. This has been the Bourse Report.